Well, moments ago, we were talking about the oil and, the energy space in general in the commodities arena. But now let's take it stock specific. In our special segment, Quarter Se Quarter Tak, we'll bring you earnings expectations from oil and gas sector today. And Sonal joins in on the big wall. Sonal, what is expected of this sector?
Thank you so much for that. We are expecting a mixed quarter coming in from oil and gas space in the Q2 earnings. Now, do remember, we did see Reliance's numbers. The refining performance was quite strong this time around. Company reported strong numbers despite some moderation in petrochemical margins. So let's now move to the oil marketing companies. That's BPCL, HPCL and IOCL. They are set to report robust year-on-year growth thanks to elevated marketing margins. However, those margins have softened on a quarter-on-quarter basis. But on a YoY basis, diesel margins, they jumped 39%, ATF margins were up 22%, and LPG margins rose 4%. Even though LPG operations continue to post losses, those losses have nearly halved on a sequential basis to come in at 4,000 crore rupees. But overall, EBITDA is expected to surge sharply, 92% for BPCL, 130% for HPCL, and a whopping 191% for IOCL. This is, of course, on a YoY basis. But on the other hand, GAIL, that is the gas utility company, could see a weak quarter. Lower transmission and trading volumes are likely to weigh on performance, with EBITDA expected to decline 26% on a YoY basis. That's on the back of a 9% drop in transmission volumes and weaker trading spreads. For the city gas distributors, or CGDs, margins are under pressure due to higher feedstock costs. Mahanagar Gas, remember, took a price hike in the second quarter to partially offset those input cost increases. In terms of volumes, IGL and Mahanagar Gas expected to post 5% growth and 9% growth on a YoY basis respectively. But when it comes to profits, EBITDA could be down 9% for IGL, 10% for Mahanagar Gas and 9% for Gujarat Gas. So overall, while refiners and OMCs are set to deliver strong earnings, the gas utilities may continue to face near-term challenges due to rising input costs and softening demand.
Okay, Sonal, thank you so much for that. But, on that note, we're actually going to sip into a very short break. We'll come back with more on the markets, focus on Dr. Reddy's as well as SBI Life, which will be in focus ahead of the numbers as well.